To be clear, though, we did not cut our rating. We did cut the rating earlier in the month. With respect to your question, I would say really the most concerning or the least concerning is not the SEC, right? Is not the SEC investigation. That seems really immaterial at this point to their numbers. The most concerning was really just the fundamental shift of EBITDA and what that means for the outlook of the company. So simplistically, Kraft Heinz, is run by a management team that likes to point to its high elevated competitive margin. But that said, with margin having come down in 18 and coming down also in 19, we realized that the investment level needs to be heightened to drive growth, and therefore the algorithm has changed. So that's why the stock is really down.
And so, Rob, as you say, stock's down 27%. Can they fight back? What levers can they pull that would make in 6 to 12 months' time this massive share price pullback look overdone?
Well, what we saw in Q4, and we probably expect some in Q1, is increased price investment, right? So if you're in categories that are feeling some pressure, namely from some store brands who have leaned into price, and your commodities have deflated, you tend to invest more in price. That said, the company pointed to price increasing likely late in Q1 into Q2, and as long as the price increases help the margin for the company as they go through the year, and their costs net of savings are able to, their savings net of costs are able to improve as you go through the year, then you could see some stabilization in the EBITDA, which would make investors potentially more comfortable buying the stock.
Rob, clearly this was a kitchen sink quarter for Kraft Heinz. I guess one of the key questions investors are probably asking right now, and why the shares are down as much as they are, is this just the company basically pulling the Band-Aid off and resetting expectations and maybe resetting them, even cautiously lower? Or could this potentially have the makings of a consumer packaged goods version of, say, General Electric, where it's the beginning of a much deeper slide?
That's the question. I'd argue. Hopefully, what we saw and heard from the company yesterday and expectations for 19 will hopefully be a bottom. Right? It would hopefully help the stock reach a bottom, and then from there, the hope again is that then they can continue to grow EBITDA and EPS in 2020 and thereafter. That being said, look, Kraft Heinz, is facing a lot of pressure, as we stated earlier, from store brands and then also emerging brands that, quite frankly, continue to emerge. So, will further price investment be necessary? Possibly. Will further brand investment be necessary? Possibly. But it's always tough to tell exactly what that level is until we start to see, the shared trends of their categories for Kraft Heinz relative to competition as they spend.
Now, the company also talked about consolidation and this idea of trying to prepare itself for a potential merger. What would that deal-making potentially look like? Who could you see them in the future, depending on how everything plays out here financially, actually team up with?
Well, frankly, that's been the question since they bought Kraft, which is, so that's been a 3-year running question. At this point, though, we haven't seen them partner with anyone. So really, the answer to the question was the same as it was 3 years ago, right? Which is naturally we can look at some of the more pressured U.S. based larger U.S. food companies, but given some of those companies are under somewhat similar pressures, maybe not as much or the same in the near term, but somewhat similar industry pressures, we don't necessarily believe that a combination of Kraft Heinz with another larger pressured U.S. food company may necessarily be very welcomed within the market, just given, frankly, again, that 3G and Berkshire Hathaway first bought Heinz, then bought Kraft, and we haven't seen necessarily a lot of value come out of that.
Yeah, I guess, Robert, a different way to frame it is, the position they're in is not unique. So who else in that position has managed it well or managed to exit it somehow?
Well, we're coming off of a very well-attended CAGNY conference this week, where we've heard from a lot of other food companies. There are a number of companies right now we believe that are, kind of a little bit further in the cycle, such that they went through a larger cost savings period, but then also have been looking to, attain more balanced growth, essentially through increased investment and maybe a little bit less margin expansion. And really, to give credit where credit's due, we don't have a buy recommendation on General Mills. We would say that General Mills, those seems to be, for the time being at least, doing well. Hershey seems to be somewhat stable. So those are a couple of companies so far that have done well. But in general, and you could see through, the pressure of the entire industry on the day, is that some of the pressures that Kraft are, facing are some of the same ones everybody else.